The idea of this presentation is going to be basically to introduce the European Investment Fund to the audience, and then afterwards to focus on the different strategies that we have in Portugal at this stage. So I'll try to be quite brief with regards to the general EIF, because I guess some of you already know us. Basically, EIF is a European institution which belongs to the European Investment Bank group. It's owned 60% by the European Investment Bank, 30% by the European Commission, and 10% by the different public and private national banks. We basically operate throughout Europe together with the candidate countries and some EFTA countries as well. Basically, we deliver, our mission is to promote growth in SMEs, but together with a financial return for investors as well. So despite being a despite being a European institution, we're also a financial institution as per our objectives. As I was telling you, within our investor base, we have BPI as a Portuguese bank. We have ICO from Spain, which is a public bank, but we also have Barclays, which is a pure commercial bank in Europe. EIF basically tries to use different mandates from different sources. Basically, we started investing European Investment Bank money, then we moved to the European Commission, and following the definition of some needs in Europe, we decided that it was good to try to get some private money as well that could be useful to basically promote objectives and provide us with some leverage as well. So we manage own resources, EIB money, European Commission money. We manage some resources coming from the different managing authorities that are basically entitled to use Jeremy funds from the European Commission. With the fund-of-fund activity that I will explain a little bit later, we also manage some private resources. And regional-wise, we basically manage some funds from different regions in Germany and Spain as well. With all these mandates, we basically try to transform them and generate some different products that we can be using. Among themselves, we basically use the fund-of-fund activity and guaranteeing as well. And all our activity is basically carried out through financial intermediaries. That means that basically we don't have any direct impact on SMEs, and the structure of the European Investment Fund is basically defined to be acting through financial intermediaries, which could be commercial banks, especially for guarantees, development and promotional banks, also for some sort of guarantee activity, guarantee institutions, and fund managers for the fund-of-fund or private equity activity. And obviously, these intermediaries are going to have an impact, a final impact in the final beneficiaries without the SMEs. The EF vision and medium-term strategy, which has been basically currently analyzed these late years, can be summarized in 7 key objectives. First of all, is to maximize achievements of European Union policies. And for that objective, we try to develop the critical sectors, basically technology, and convergence countries as well. We try to fully develop and integrate our risk finance product range, which means that we don't want to be like, having 2 different or 3 different activities operating in countries and regions. We try to put them all together and try to build like, some sort of structured products that can have a higher leverage impact on the different regions. For instance, we try to work together with the European Investment Bank, which is probably the institution that has the larger financial muscle, and we try to use funds coming from themselves in order to have a better impact on the different institutions. We try to leverage our own capital, but we try to get some money from third-party players in order to catalyze 10 billion in equity, mezzanine, and debt annually. Obviously, the debt part has a larger impact on this figure. We try to do this without having an impact or a negative impact on the risk management activity. I think for us, it's key to have a AAA. It allows us to basically have a very positive impact on the different financial intermediaries in order to basically, enhance the credit rating of some of the, lower tranches of securitization, etc. We try to build processes and products that we can basically escalate in the future. I think as a European institution, we obviously have some rigidities that we need to tackle. But once we define a product and we know how to escalate it, it just basically works in a much better way. We have an objective, as we were mentioning before, which is to generate a financial returns for our investors. And this makes us a bit different from the European Investment Bank and other financial institutions, which is that despite the development role that we have, and it's the first one in our objectives, we need to generate an operating profit, and we need to get a return on equity, which is not, despite not being very high, it doesn't allow us to basically be deploying money without risk management considerations. And we basically obviously try to promote and enhance an excellent internal and external reputation as well. I think this is the product range that we're actually managing, and we're basically put it in a matrix. We have on the X side we have the SME cash flows, and on the SME development stage on the X axis we have the SME development stage. So we basically start at the business angel and technology transfer product, which is the pre-seed and seed phase, and obviously the one that generates less cash flows. Then we move on to microcredit and VCIT and earlier stage. And then if we go to more basically define and develop products, we go to the formal VC funds and mezzanine funds. And obviously we end up with the portfolio guarantees and credit enhancement. We never go to the public store markets in any case. This is basically a map that indicates what are the net equity commitments that we've done so far throughout Europe. It's the figures as of 31st of December 2010. I think in Portugal you have the figure there, which is 155 million euros committed to the country, which is significantly higher than the one that we have in some other countries of the same size, like well, a smaller size, but more developed venture capital or private equity activities such as Austria, Belgium, etc. Then this is basically the same map, but with the outstanding guarantees that we have throughout Europe. In this case, in Portugal, we have 247 million deployed, while in some other countries we've been a bit more active. So there's a field that we're basically trying to improve here in the country. The EIF investment focus, as I was basically pointing out before, it's moving from the pure innovation to the private equity activity. In innovation, we have the tech transfer and incubators. We basically started with a different activity 3 or 4 years ago that was more closely related to universities and center of research. And basically, we've done some deals in Scandinavia with Karolinska. We've done some deals in Belgium with Leuven University. We've done some deals in the UK with Imperial College. And we're trying to replicate this to other countries, such as Southern European countries. For the time being, we have not closed yet anything in Portugal, but it's something we're looking at and could be of a lot of interest to our institution. Then business angels, we're basically trying to set up a product that will help business angels throughout Europe. I think the previous panel that we had here was very important and very basically interesting. We've been basically in contact with many business angels communities, and we're trying to define some sort of co-investment arrangement, co-investment product that could be a help to the different business angels throughout Europe. Venture capital, we've been very active on this let's say, part of the graph. We've done quite a lot of investments in seed stage and early stage, all throughout Europe, also in Portugal. Then on the private equity, expansion, development, and mid-market, it's a core activity for us, so we've been very relevant on this side. The primary fund investor, just to summarize, we're basically the biggest fund investor in Europe. We've been repeating cornerstone investments in top quartile funds throughout Europe. We've done quite a lot of first-time teams in Europe as well, which has been it's proved very important in these late years specifically. And despite, obviously, I mean, when you are basically managing a fund and you have to say yes or no to different players, a lot of people is not going to be happy. But I think we've been very important in developing the venture capital activity in Europe, and we've been key to allow funds to raise funds throughout these last 2 or 3 years, which have been very difficult in terms of fundraising. And then here I would like to focus a little bit more. In 2006, we basically started managing some specific fund of funds for regions and sectors. We basically detected that some regions and sectors were underdeveloped, and our own resources were not going to be enough in order to have a catalytic effect in the markets. So basically, we undertook some studies throughout Europe, and we ended up setting up and raising funds for some specific regions and technologies in this case. So we basically started with a fund in Germany, which was basically financed 50% by the EIF and the German government to invest in technology funds in Germany. Then afterwards, we raised another fund in Spain. It's called Neotech. It's a 183 million euro fund to basically targeting to invest in technology funds in Spain. And through this same analysis, we detected the necessity to do investments in Portugal and to have basically a larger capacity that could allow funds and new funds to raise money here in Portugal. Then in 2007, 2008, we started fundraising for PVCI, which is Portugal Venture Capital Initiative. And we ended up closing the fund at the end of 2008 with 111 million euros. We will discuss a little bit more in detail, but basically the main investors are European Investment Fund, the Portuguese government through PM Investimentos and Dirección General de Tesouro. Then we have other private investors such as VPI, Espírito Santo, Caixa General de Depósitos, Santander, Millennium, etc. The idea and the purpose of this was basically, we had been active in Portugal since 2000, and since 2000 we had only done 2 deals in Portugal. We had done a deal with Espírito Santo, and we had done another deal with BPI, with Fondo Caravela. It was Espírito Santo Capital and Fondo Caravela. And we thought that we had to have a higher impact in Portugal if we wanted to promote the development of the venture capital and private equity industry here. So for us, it was key to have, like, not only additional resources, but to have some sort of intelligence, internal intelligence in Portugal that could help us to, like, basically get to know the players and try to boost this segment. This is very shortly the structure. We have the PVCI shareholders. We did the capital contribution. PVCI fund of funds 110 million, and then we have an advisory agreement with the EIF, which is basically making sure that the way that the fund was going to be managed would not differ from the way we were managing EIF. So despite having an independent investment committee, which is formed by 4 reputable members, Portuguese individuals and myself, we make sure that every deal that is sent to the Portugal Venture Capital Initiative Investment Committee has gone through the whole EIF process, which means that in terms of legal, compliance, risk management, etc., it complies with the quality that we would require for any other investment in Luxembourg. Basically, the PVCI targets, it's a very generalist fund. As I was pointing out, we had only done 2 investments throughout 8 years in Portugal, and we had done an analysis of the Portuguese landscape, and we knew that we could not be only targeting VC or private equity or earlier stage funds, but we needed to be more generalist in terms of both sectors and stages. And the investment strategy at the beginning was basically to invest in 7 or 2 independent Portuguese or European managed funds. However, our investors and the board of directors made an emphasis and said that given the current situation in Portugal, that they were more keen on basically focusing on pure Portuguese teams with a significant Portuguese focus. And obviously, the ultimate objectives, besides developing the Portuguese private equity and venture capital markets, was to achieve a financial performance to shareholders. We believe that the only way to attract private money to the sector is basically to do things in a serious way, and basically to be able to let these financial institutions and private players that the money that they're putting in this initiative is not basically like a gift to the industry or like let's say paying a favor to some specific actors, but that they can expect to get some returns from this. Just to let you know where we stand on PVCI as of today, we've approved 4 deals worth 60 million euros. We've signed 2 deals, 30 million euros. We've been Explorer 3 and Interrisco 2. And we are closing an additional deal next week for another 15 million. So we will be on the range of 45 million invested. The other deal that we approved, I don't know when it's going to be signed because the current situation in Portugal has basically been very difficult for funds to raise funds not only from foreign countries but also for like the common investors in the Portuguese venture capital or private equity funds, which were the financial institutions. And we cannot be the only investors in a fund. We always need to have obviously a leverage from third-party investors and obviously private ones as well. And we're actually targeting to approve another investment throughout 2011. It's a smaller investment, but it's more dedicated to the venture capital and technology focused funds. And we hope to basically have, the last 6 months have been very difficult. A lot of initiatives were coming out to the market, and they basically decided to postpone them because the situation was not the best one to raise funds. We hope that, better stability or higher stability in Portugal, together with more visibility on what's going to happen in the next 3 to 4 years, will allow some of these players to come back to the market, and obviously we'll be supporting them there in order to generate some more new independent funds in Portugal. The idea is that if we ever raise a PVCI2 in 2 or 3 years, we will have basically a deeper landscape than the one that we used to have some 2 or 3 years ago. Just as a summary, we've done 4 investments in 2 years and a half. We had only done 2 investments in 8 to 9 years through EIF before. So I think we need to continue focusing on this, and hopefully we'll have a positive impact on the landscape. Thank you very much.